Hi everyone, welcome back. This video continues directly after the trendline video. The focus of this one is Fibonacci retracements. I didn't plan to do this one as quickly as I am. I wanted to sort of plan it out a bit more, but the charts are actually giving us a really good example of how to use these. So if you saw my last video on the trend lines, awesome, you'll understand what just happened with the Bitcoin charts. If you haven't, it could be a good idea to go back and watch that. It does explain drawing up trend lines a little bit, which I'll get into more throughout the series as I'm doing my own trades, my own charting. With this one, with the last video, Bitcoin had a huge drop. It hit my trend lines that I had set up, but we weren't entirely sure if it was going to stop. So I put a trade in at this trend line, half a trade, or half the amount that I would normally put on a trade, I should say, just to give it room for if it did continue down, I could put on the other half of the trade, which it did. So now I have the full normal amount that I would normally do, which is, it's up to you how you manage your risk. I would generally go for 3% of the account as my trade. So that's what I've done. 1.5% at the top, 1.5% at the bottom for the full 3%. Luckily, it did. Oh, I shouldn't say luckily. I should have more faith in my skills here, but it did respect the trend line. So it looks like there's support here. And I mentioned in the previous video, a lot of the time, the support comes from other people looking at the same thing as we are. So we've put trend lines here. We keep it nice and simple when doing the trend lines and using our tools. That way, when other people are also keeping it simple, there's more of a chance of their charts being the same as our chart. When prices do drop or increase to a higher trend line, it's those people who are doing the same charts as us who are also putting the trades on those lines that are actually causing the support, I should say, the support there or the resistance at the top. They're putting in orders and it's causing it to retrace. So if you keep it simple, more likely other people are charting the same, and it reinforces the supports that you're looking at. Well, that's enough about trend lines because that was actually last video. What I'm looking at today, or now I should say, since it's only a couple of hours after the last one, is the Fibonacci retracement tools. So there are two of them. There's the standard Fibonacci retracement and the one that is trend-based. So with the standard one, nice and simple, we're taking it from the high down to the low. And normally you shouldn't chart using, things that are still happening. So if we go to a higher time frame, we wouldn't really want to be charting using the bars that haven't closed off yet, the candles that haven't closed off yet. But this is actually a great example. If it does retrace and it does respect these and keep going up, these are the supports, or the resistances, I should say, since it's going up, that we'll be looking for. So dragging from the top to the bottom, there are a couple of key numbers on this. So the 0.5 is actually, we'll go even lower. So the 0.382 is an important resistance level for if it's on a downtrend. So if we expect it to drop down, slightly come up, and then keep going down, the 382 is what we'd be looking at. With this, overall, Bitcoin seems to be on an uptrend as long as it doesn't break through this line. So we're not going to be too worried about the 382. That's for if it's on a strong trend, which it doesn't seem to be. So the 0.5 is more of a neutral, but the most important ones, and the reason I've got them as gold or yellow, but gold in my eyes, is the 618, which is the most important, and if it gets past that, the 667. So what I would generally like to do that here, and you might have seen some of my buy areas down here, where you can see the reaction that was from that one, come down, gone straight up. this big buy area down the bottom as well, these are all done using that 618 level on the Fibonacci retracement. So what I would be looking at with this, so I'm just trying to get it looking nice. I've put a trade in down here. If it does continue to respect these trend lines and bounce off that support, I would expect a sell area to be in that area. And what I can do here is put a alert just before it enters that area, so I can maybe look to put in a sell. The idea doing that is, again, if everybody's doing the same retracement tools as I am, they might put their sell order a little bit higher, and if there's too many of them, mine might not be filled. So I'd rather take a little bit less profit to ensure that I'm actually going to get it if it does spike up. But as mentioned before, there are two different Fibonacci retracement tools. This one's just going off that one dip. The other one, the trend-based, I probably shouldn't have put that sell area up yet, because the trend-based Fibonacci is probably the one that's a bit more weighted. So it's more likely to be respected by like the supports and their resistances. So with this one, I might just move that forward a bit. Where you put these areas doesn't really matter, as long as they're lining up with the peak and the bottom. So I've just moved that across to make room so I can do this trend-based one. So what we'll do here is put it at the most recent low and then up to the most recent high. And you can see my cursor's not on these highs, but just follow that dotted line across and you'll see that they're lining up. I'll do that again. So this most recent low, I'm just looking at that dotted line, and you can see that even though the cursor's not on that most recent low, the dotted line is. I'm just putting it over here so it's a bit out of the way of the other Fibonacci thing that we got. And then again, look at the dotted line. It's going to this one here. So from the most recent low to the high, and then to the new low that the current movement has created. And what we'll do here, the 618, the 0.5, they're both around this 618 and 667. So that's kind of reinforcing. The more things that are lining up, like the more indicators that are sort of telling you the same thing, the stronger it's going to be. So that 618 level there actually looks pretty good. It's just past the 0.5 of the trend-based Fibonacci tool. Now what I might actually do, if I do kind of expect it to go up a bit past there, I could put a sell order for half of my order on the 618 of the standard Fibonacci, and then put the other half at the 618 of the trend-based Fibonacci. You can see it at 618 there. If anyone doesn't know what I'm talking about, 618, 618. 0.5. So I could put half of it at this one, the other half of the sell order at that one. So that way, yeah, I'm writing it up a little bit more, but there's a saying with trading, it's you can never go broke taking profits. So instead of aiming for this one, having it get to there and then coming all the way back down and losing our profits, it's probably better in this case because they're so close to each other. Just to expect to take profits around here. Now, again, in the last video, I mentioned about when in doubt, zoom out. This is on the 1 hour candles. So these sell areas are only going to be respected in like the 1 hour candle. So it's very possible that it might go up, come back down. It's not going to be go up and then shoot all the way down, because the 1 hour candles aren't a good indicator of the overall pattern. So if we go out to the 4 hour, now you can see the little recent lows and recent highs. They don't seem as big anymore. That's because, you know, in a day where we're looking at, 1 hour in a day, that might be pretty sizable. But when we're zooming out to the higher time frames, those 1 hours aren't even a candle anymore. So when you would be looking at the higher, I can delete those now that I've got my sell areas. A lot of the time I do like to keep them on the chart so I can remind myself why the sell orders are there. But let's zoom out again into a day. And you can see these ones down here. These are actually because I've done these as on the daily charts. So the Fibonacci, this is a standard Fibonacci one. This one you can tell because it's only got the one line going down. So I've done that from the most recent high, which was actually back in January, the 14th of January, down to the most recent low, which was the 8th of February. So you can tell we're looking at a lot larger movement when we're looking at the larger time frames. And this whole channel that we've been talking about in this video and the last video now doesn't seem too much. Like, it doesn't seem too big. It's only one little stretch in the overall chart, as you can see there. It's only this little part here, which something that you can see here, which is kind of exciting. That trend line is going all the way back from October last year, hitting a couple of peaks there. Bitcoin has now broken out of that. It's likely, I'm not going to say that it is definitely going to happen, but when there's a breakout, it's likely that it comes down to retest. And you can see that the little sell order that we've put there, or not sell order, sorry, the sell area is tiny compared to the one that we're looking at overall. So it might go up and then come back down, and that's going to be a trade within a day, like half a day or so. Whereas when it comes up to this point, it's going to be coming down for like maybe a month, each of these candles being one day. So, sorry, going back to the Fibonacci, which is the focus of this video. Put the high there, put the low there, and you can see that exactly the same as I just did live with you guys. That sell order, sorry, not sell order, the sell area, or I should say the resistance area that I've marked out, is that exact 618 to 667 that I just put there. Now you can see these big ones that I've done. This one here is actually the overall from the low back in, it looks like 2022, going all the way up to the most recent high, which was October 2025. Now that's gone a huge climb, and it's taken 3 years to do that. So I've marked up on here the 618, and you can see that green area there that I'm hovering over now is at the top of the 618 for that whole 3 year uptrend. It's gone up, it's hit a high, it's on its way back down. If it does hit that green area, that's where I would expect to put a buy order that I could be holding for, well, maybe I wouldn't be holding it for years, but it's an indicator that we could be trading an uptrend for the next few years based on nothing more than how the charts look, not any geopolitical thing or anything like that. It's just low, high, hit the resistance, and then we'll look at the Fibonacci charts again to see where, low, high support, and then we'll look at the Fibonacci again to see where the next resistance would be, so we can see where we expect it to climb next time. I might actually do that here. This is not a prediction. This is not anything like that. This is just to show you guys how these Fibonacci things work. So if we were to go from a low, you can see that I've lined it up with this over here, to a high, which is this peak here. And then we're just saying that what if this is the current low? Now we'll put that there. Now because it's a uptrend, like it's gone up, it's come back down, not as far as it went up, so it's a high and then a higher low, we would then but the Fibonacci tool is showing us that the next high is going to be around that 618, which is kind of actually very similar. So we could get a double peak there. Let's zoom back in. This is our channel. This is our current candles. This is how Bitcoin is reacting to that trend. So just to reiterate, from the most recent low to the most recent high, to see where it's going to come back down to, the 7-6. So I mentioned the 382. So if it was a strong uptrend, you would expect it to bounce off the 382. I never really trade off that. I never really trade off the 0.5, which is kind of neutral. I look more at the 618, the 667. If it breaks through the 618 and the 667, but you still expect it to be an uptrend, that's where the 786, which is this one in red. I've got that in red because if it breaks through that, then it's breaking through. Like it's going to probably go down further than you expect. The fact that the 718, which is like the last resort, kind of lines up with our trend line here, is just another level of I shouldn't say another level of support, just like another indicator that things are going to sort of maybe make a change around that area or have a reaction around that area. It could just be that they stop, soak up some orders before they keep going down. Hopefully it's going to go back up because I've got a order. And yeah, we can keep trading that as long as we want. It's likely that it's going to be small trades up and down until it sort of breaks. It's kind of what makes these triangles. These 618s you'll see a lot of the time. So from there to there, it's gone up, and see that it's hit that 618 there, and it goes down, and it hits a 618, goes up, hits a 618, goes down, hits a 618. It's not going to happen every single time because there'll be changes in the market, but a lot of the time it's these 618 levels that are creating these triangular patterns. Bitcoin's in a funny spot now because it's broken out of that, which is a sign of an uptrend. Again, this is on a smaller time frame, so an uptrend on a smaller time frame kind of just fits in with the channel that we've got marked up. You can see here an uptrend on a smaller time frame and then a downtrend on a smaller time frame. Each of these are likely to have had breakouts of trend lines before they launch up, and then breakouts downwards of trend lines before they go down, vice versa. In this case, we've got the trend lines here in a triangle. Bitcoin's broken out to the upside, so it's an indicator that maybe it's going to go back up to the top. When it does, we'll look for either a resistance again on that line and put some short orders in to sell, or it could break out. But look at that big sell order up there. Sorry, sell area. I'm hoping this makes sense. It's, as I said, I'm not a pro YouTuber. This is just me. I want to document what I do to get rid of all the hype around, all the Instagram gurus and stuff selling courses. I might not explain everything perfectly. If you do have any questions, let me know in the comments. Or if there's anything that you want to see, anything that I skipped over. I promise that over time I'll be more comfortable with this and I'll start making a lot more sense. Let's look at this on the 15 minute before we go. Has bounced up, come back down to the trend line. It's very hard to comment on what's happening here on the larger time frames. Obviously it looks like it's dipped below the trend line, come back up and closed over the top of it, which is a good sign. If they continuously close underneath it, it's a sign that it might bounce back down, but closing above it is a good sign. This 15 minute one with 17 seconds left, hopefully that closes above it as well, so will be a further indicator that even on the short time frames it's going to stay above. Because I'm in profit here, my buy was actually around here, this level. I've actually got a stop loss under this low, which isn't based on any sort of resistance. So I kind of want to tell people how to find resistance for stop losses, but I didn't really plan to put this trade on. This is the sort of time where I could even look at changing my stop loss to a break even. I've entered the trade. It's had a good reaction. Now I expect it to keep going up, but if it breaks through the trend line again, if it stops me out and I make $0 but lose $0, that's not the worst case scenario. So I'm fine with that. A free trade is a free trade. But maybe while I've got you, I don't know how long this video is going for, but let's maybe have a look to see if we can find any support if it does break through. What I'm going to do here, I'm going to use the trend based on this high. Actually, let's zoom out to a higher time frame. So let's use this one and look at that high to that low to that high. So there's that 718 again. So as I said, there's the 768. The 768 is kind of a last resort support. Whereas if it breaks through that, it's not a good sign that it's going to reverse. So that 768 actually matched up with the shorter time frame 768, which is matching up with our trend lines. So this actually has a lot of support in that area. What I would actually be comfortable doing here is moving the stop loss. This isn't a stop loss, by the way. This is just an alert. I trade on Bybit, so the stop loss is in a completely different app. But I would be comfortable moving my stop loss to the bottom of this low, and not just because it's, putting a stop loss under the most recent low, which a lot of people say without any explanation. This is because I have support from that 768. I have support from the lower time frame 768, which we just showed. I've got support from this trend, and I've got support from this trend. So if it goes past this level and closes down there, it's a good sign that the sellers are just completely overwhelming and overpowering the market at this point. So you'd want to just get out of the trade, because if it breaks through that area, we're not sure where it's going to go, and would need to wait for it to show signs of a reversal before we jump in and start charting up again. You never want to chart up while things are still in action. If it did break through, we'd let it settle, would have the day out of the market, and just wait for it to settle so we can rechart. Again, I don't know how long this went. I probably rambled a bit. I probably haven't gone into enough information about certain things with the Fibonacci tools, and I have talked a lot about trend lines as well, but it is a series just about my trading, how I do it. Hopefully people follow along and enjoy the journey. And also, these are just intro videos, so I wanted to do videos on what each of these are, so then later when I'm actually doing my trading videos, people have a bit of an understanding of why I'm doing the Fibonacci graphs or why I'm doing trend lines and stuff. But yeah, if there's anything you want to see, just let me know. I'll have a link to the next video at the end of this video once it's uploaded. Like, subscribe, all that YouTuber stuff. And yeah, if you get into the charts, if you get into the trades, good luck, and I hope you do really well. All right, see yous.